Hi, this is Jarrod Rogers from Beyond Accountancy. This is part 2 of our first home buyer series, and we'll be looking at 5 housewarming gifts from the government to help get you into your first home. These include Commonwealth government schemes like the First Home Super Saver Scheme, the Loan Deposit Scheme, and the new Home Builder Scheme, as well as state-based concessions and grants. In our video series, we're trying to break up the first home buying process into stages. This video is about the first stage in the process, which is saving a deposit. I think the easiest way to understand this is with a case study. So let's say we've got a first home buyer in Victoria with a budget of $600,000. Their incomes are $80,000 and $55,000, and they've saved a deposit of $60,000. Now $60,000, 10% of their budget price, that looks pretty healthy. But you actually need a lot more than just a 10% deposit to purchase a home. For example, as they're borrowing less than, they've got a deposit of less than 20%, they're borrowing more than 80%, the bank's going to charge them lender's mortgage insurance, or LMI. Also government charges, the main one being stamp duty. There's conveyancing or legal fees, plus disbursements, and then settlement adjustments. So let's say, for example, you buy a house and the owners prepaid their rent, their council rates, their owners' corporation fees, things like that. You'll have to reimburse them for the amounts that are prepaid that you'll get the benefit of, and you need to budget for that as well. So let's say they need $109,000, which is a shortfall of $49,000. Before you switch videos in despair, let's see what happens once we open these government housewarming gifts. Gift number 1, stamp duty concessions. These are state-based, so I've tried to list what they are in the major states. 3/4 of my clients are in Victoria, so I've put that first. A first home costing less than $600,000 will not attract stamp duty, and there's a reduced stamp duty up to $750,000. The other big states have similar schemes, but different price ranges to match the real estate market. So Sydney's more expensive, so New South Wales is higher, etc. I couldn't find any concessions in South Australia, but check the South Australian government website to confirm this. So we take out the stamp duty, that reduces the government charges. There's still some charges like title transfer fees in Victoria, things like that, but it's much lower. And we've bridged the gap considerably. So $49,000 is now $18,000. Without the major cost of stamp duty, home ownership isn't so far away. Our next gift is a First Home Super Saver Scheme. The scheme lets you save your home deposit in super rather than personal savings accounts up to certain limits, which I've put on the screen there. You can withdraw voluntary super contributions made since 1 July 2017. You can't withdraw your employer's contributions like the 9.5% that they put in, and you can't withdraw any top-ups you made before 1 July 2017. So it's a more recent scheme. There are 2 advantages. Firstly, there's the tax saving on the difference between personal tax rates and the super tax rate, which is 15% for most people. The second advantage is the earnings are much higher than personal savings. So you're deemed to earn 3.89% at the time of recording, which is much better than you're going to get on online saver at, say, 1.5%. We have a whole separate video on this topic, which I'll link to. It covers all the details. You can use the link to the website above to calculate how much you'll save under the scheme. So our couple has $60,000 or $30,000 each. The lifetime limit in the scheme is $30,000. Let's say they've saved their entire deposit through super. If they'd done that, their deposit would be worth, after tax, $25,000 each, which they'd save that same money in a savings account. It would only be $19,000. This is because of the difference that I mentioned before between personal tax rates and super tax rates. So they'll each have saved a bigger deposit, $5,846 more, which for a couple is worth $11,000. So let's factor that in. The additional tax they've saved by using that scheme and the additional earnings, take that away from the shortfall, it's now only $6,000. So move on to Gift 3, the first home loan deposit scheme. This is going to eliminate the remaining shortfall, so let's have a look at it. This scheme eliminates lenders' mortgage insurance for buyers with a 5% deposit. So if you're borrowing, as I said before, more than 80%, or your deposit is less than 20%, in other words, the bank will charge the lender's mortgage insurance. This is an insurance policy that doesn't give any benefit at all to you as the borrower. You pay for it, but only helps the bank, so it's a straight waste of money for you. This scheme means that people who've got more than 5% but less than 20 won't have to pay that charge, and that can save thousands. So the scheme is limited to 10,000 applicants per financial year. They got fully subscribed in the first year, and new applicants will be able to apply from 1 July 2020, which is only 3 weeks away. There's an income limit for this, but in our example, the couple makes under that income limit, so they will apply. On top of the criteria on the previous slide, there's also a limit of the actual purchase price of the property. I've listed it there. You can pause if you want to see the details of that. But $600,000 is their budget in Victoria, and that's with the maximum for this scheme. So we take out $12,000 of lender's mortgage insurance from the example. And we can see now the shortfall has now gone into the negative. Or in other words, they've got a surplus deposit. Now I've deliberately chosen a couple on moderate income with what by Melbourne standards is the moderate purchase price, because that's the range where the biggest savings are under these schemes. So everything we've covered so far applies to any first home, but there are further benefits for new homes. The most commonly known one is the First Homeowners Grant. It's been around for 20 years now. It varies from state to state, but the common features are that's for new homes. You can't have owned property before. For couples, both members of a couple need to qualify, and there's restrictions, also not restrictions, but requirements for how long you live there once you've completed the purchase. If you want details on how it works in your state or territory, there are links on firsthome.gov.au to the 6 states and 2 territories and the schemes that they have. Here are some of the bigger states. You can see it's pretty consistent with a few variations. Until 30th of June 2021, so 12 months roughly from now, Victoria has an extended grant for a new regional home. Perth has a higher limit for the value of the land and building in regional areas north of Perth. And South Australia gives a bigger grant, but it's harder to get because of a lower price limit. Pause here if you want to read this in more detail. This also can be found through that website I gave you before. The second concession for new homes, and the last one for today, is the Home Builder Scheme that was announced last week. Now at this stage, I don't think it's legislated, it's just an announcement. So I'm basing this off the fact sheet on the Home Builder website. So what is it? It's a new payment to bail out the residential construction industry, again, due to the COVID-19 downturn. From what I've heard from clients, there isn't really much of a downturn in some parts of Australia, but nonetheless, the construction industry has fantastic lobbyists. So there's going to be $25,000 tax-free to people building a home, and that could include first home buyers. Apparently there are going to be some state measures, so keep an eye out for those. Various states will be giving more, or they'll have different application processes. If you go to the Home Builder website, you can subscribe for updates, so you can hear about these developments as they come along if you're considering doing this. This is only a short-term thing, so the scheme runs until the end of the calendar year. You have to sign a construction contract by 31 December 2020 and start building within 3 months. That's for house and land worth less than $750,000, and it can't be an investment property. So those are the contract and home conditions. There are also conditions on the homeowner. You have to be an Australian citizen, 18 years old, which makes sense. A natural person, so not a company or a trust. You wouldn't want a company or a trust owning your home anyway, unless you really love paying capital gains tax. And there are also income limits, which is similar to the first home loan deposit scheme. Let's put a little note there. If your individual income is more than 125, but your partner has a low income, you can still meet the couple test even if you fail the single test. The scheme also applies to renovations valued between $150,000 and $750,000, but that's outside the scope of this video. If you think any of those ideas will help you get into your first home, here's what you can do next. There are some resources you can look at that cover each of those different concessions, and I've put the links in the description below. If you're a client of ours, or even if you're not and you want to be, we're here to help. As well as being able to give tax advice on topics like the First Home Super Saver Scheme, we can now also arrange finance for your first home. First home buyer advice appointments are free if you organise your loan through us. We can help you work out how much a home will cost you, with all those costs like stamp duty, etc., what you can afford to borrow, and what your monthly repayments are going to look like. As I said, we're here to help. Please sign up for notifications so you don't miss the rest of the series if you're interested. For now, thanks for watching, and we'll talk to you soon.